So we go back to the first example we looked at with a forward contract in place. So if they secured a forward contract in at 125, that's then fixed in, and the first payment then goes through 600,000 euros as budgeted for. Second payment goes through 900,000, and completely avoid that £117,000 loss which we saw in the first example. Now, another area in which effective currency management has actually proved invaluable is for the smaller businesses, helping them to demonstrate financial stability to actually see through larger contracts. Now, one client we helped actually receive what was for them an enormous order from a major supermarket after an initial trial period did very well. And one of the supermarket's concerns was the ability of that company to actually manage the huge order that had been placed with them and the risk that entailed. So we worked with them using the forward contracts to actually demonstrate that they were managing their risk effectively, and they could complete the order, and it went through absolutely fine. So now, talking to someone in sort of foreign exchange wouldn't be complete without some sort of crystal ball gazing, and it's a big part of our business actually helping clients plan and budget around what the financial markets are expecting to happen, and it does change almost, some days it can change by the hour what's happening. So at the moment, there's four really key questions that need to be asked and answered to determine the likely path that sterling will take. And the first one is, how's the US economy going to fare over the next 12 months? Now, the US economy has been flagging of late with very mixed data coming through. One of the problems with a weak US recovery is that it reflects badly on the global economy as a whole. And you would assume that weak US GDP data, for example, that sterling would strengthen. But actually what happens is investors then buy into US government bonds as the safest option, and sterling actually drops. So the US economy is very key in terms of where sterling is going. And secondly, in terms of the UK government debt, is that going to keep its AAA credit rating? And the UK, after we saw a relative wave of euphoria following the new government and its hardline cost-cutting rhetoric, that's actually dropped off since then as the reality really sinks in. The growth prospects drop off, and global investors aren't particularly keen on putting money in a country or putting money in a country's currency where there's not actually going to be much growth. There's no prospect for interest rates and that high yield on their investments. So I think we are going to retain that AAA rating, but growth is going to be very low for the next year or 2 years, and we're probably going to see sterling held back by that. Now, in terms of Eurozone, the debt crisis there, is that going to be, we're going to see a single currency still in 2 or 3 years' time? I think we are, but we're probably going to see a very different Eurozone, and the key point to remember is that this debt crisis is very much a long way from being solved. Now, the final point on this is I'd like to turn to the rather kind of quirky Big Mac Index, which is a sort of tongue-in-cheek creation by The Economist magazine, which has turned out to be surprisingly accurate in terms of currency forecasting over the last 10 years or so that it's been in operation. So what it does is actually compares the price of one Big Mac across the globe to give you an idea as to the exchange rates, working on the principle that all Big Macs being equal, they should all cost the same around the world. So currently, it actually says that Big Macs in Europe are a lot more expensive than they are in the UK. And to anyone that's been to McDonald's on the Champs-Elysees, this might sound an obvious point, but it does suggest that sterling should really be up around the 125 level against the euro, as opposed to the current 120 level. So that's maybe 6 to 12 months down the line, we should really be looking at around maybe 125. That's obviously the current thinking. And it shows that Big Macs are relatively cheaper in the UK, relatively cheaper in the USA versus the UK, which suggests that sterling should really be around the 145 level against the US dollar, as opposed to the current 153 level. Now, despite this rather simplistic analysis, the recent 6 to 12 month forecast from major investment banks in the city are saying pretty much the same thing, that the euro should be around 124 to 127 against sterling, and between 140 and 146 against the US dollar. So, currency exchange is very straightforward. Essentially, it's what people think the prospects of an economy and whether that's looking at the relative value of goods and services in different countries, using the Big Mac index, or using the very complicated analysis at the sort of investment banks in the city, it all ends up around the same. Now, why should you use us as a currency specialist? I mean, one of the major reasons is we've numerous clients in the wine and drinks industry and actually understand those issues that are being faced, which is one of the reasons why we're working very closely with Harper's in the magazine, with the articles, etc. We offer a very proactive level of service at all stages of the transaction, from planning and budgeting all the way through to the final payment of a supplier. We offer much better than bank exchange rates and have a very transparent pricing policy and no fees at all. And we're also the only currency specialist in the industry that doesn't pay staff on an individual commission basis. So if you spoke to someone, one of these competitors, they're getting 20% of every transaction you make, which means that if you ask them, should I wait 6 months, should I do it now? Every time I'm going to say, let's do it now. We don't operate like that at all, which means that our interests are very much aligned with our clients in terms of actually what's best for them. Is it better to wait? Is it better to hold off a little bit? Where's the currency going to go, and what's actually going to benefit you? One of the major things that our clients remark on is that approach is far less pushy and aggressive, and the whole process is hassle-free, easy, and even, dare I say it, an enjoyable experience. Smart can help you plan around your projected currency movements and determine sensible budget levels for payments and projects. We can help put in effective risk management strategies and ultimately save you thousands of pounds versus the bank. And we saw in the examples of how this improves and most importantly protects that profit margin. Now, managing foreign exchange risk guarantees profit throughout contracts and projects and cuts supply chain costs by avoiding, first of all, excessive bank rates, but also by using that strategy, those forward contracts and that level of proactivity. We can help you do all of the above, really. Now, if you'd like to learn more, we have produced a detailed report on the wine industry. There's a few on the tables there. It's the green thing with a picture of grapes on the front. So it's nice stock photography there. But so that goes into a bit more detail on how the forward contracts work, how the process works, etc. And feel free to give sort of either one of my colleagues a call, or grab me in the break, have a chat. That's the phone number there. We've got a dedicated sort of partner site with Harper's, which is the smartwinespirits.com, and the main website is smartcurrencybusiness.com. So thank you for listening, and I think I'm answering questions on the panel. Yeah, okay. Thank you very much.